Hi, I'm Steve Bourie, and I'm the author of the American Casino Guidebook. If you're not familiar with us, please be sure to visit our website at americancasinoguidebook.com. Joining me today is my son and the editor of the American Casino Guidebook, Matt Bourie.
How's it going, everybody? And our video today is on two of everyone's favorite subjects, gambling and taxes.
All right, like Matt said, today's topic is gambling and taxes. It's not as much fun as Matt was saying it might be, but it's something that you have to deal with. And fortunately for us, we have one of the country's leading experts in gambling and taxes. His name is Russell Fox. He's been doing this for 30 years. He's an expert on it, and he's also written a couple of books on it. So again, this is Russ Fox on gambling and taxes. Russell Fox, how are you doing today?
I'm doing well. How are you doing?
I'm doing well also, thank you. And joining us is my son, Matt Bourie. He's the editor of the American Casino Guidebook. And this is our first visit with you. And gambling and taxes is an interesting subject. It's a dreaded subject because people don't like to, you know.
I hate to pay Uncle Sam.
Well, that and the headache of all the paperwork and everything. But you are one of the experts in taxes, gambling and taxes. You are the principal of the Clayton Financial and Tax Firm. You specialize in financial management and tax for more than 30 years, and you're considered one of the nation's leading experts in gambling and taxes. You're the author of Tax Strategies for the Small Business Owner and co-author of Tax Help for Gamblers and 3 books on poker. Now, I had done an interview years ago with Jean Scott. She's one of the other co-authors on your book, Tax Help for Gamblers. So what we're trying to do today is we're just trying to get a general how-to for people who are involved in gambling and taxes. And you know, most people don't really think about taxes. And what happens is they'll play and then suddenly they'll hit a taxable jackpot. And taxable jackpot nowadays is $1,200 or more.
On a machine.
On a machine, right? And table games is different, and we'll ask about that later. So then they get put into the situation because they're going to get issued they're going to have a hand pay at the casino, and they're going to issue a W-2G, and which will go to the government, and then they're going to have to claim that on their taxes. So we wanted to explain to gamblers how the tax systems work, and to give them some advice on the best procedures to follow to possibly save money on any taxes due for the gambling winnings. So Matt, why don't you start us off with our first big question here?
All right, so how are gambling winnings treated for tax purposes? Are all winnings supposed to be taxable, or is it just what you hit on a W-2G, that's the tax form we were talking about that you get when you hit a $1,200 or more jackpot? Or how does that work? Because I know what some people do, but what are people supposed to do?
Well, at its simplest, the U.S. tax code can be boiled down to 2 sentences. All income is taxable unless Congress exempts it. Nothing's deductible unless Congress allows it. And there is no de minimis exception to income. If you make $1 at a casino, that is taxable income. It is not just those reported on W-2Gs.
So technically, any money at all that you win, if you go into a casino and you win $50 and you leave, technically you owe taxes on that $50 because it's income.
That's absolutely right. There's literally, when I took the exam to become an enrolled agent, and there was a question on it, John wins $5 playing poker. How much income does he have for tax reporting purposes? And the answers range from $0 to $5, and it is $5.
Okay. So a lot of people think that, oh, well, I don't have to report what's on the W-2G, but realistically, you're supposed to do that. But let's get into the part of how realistic that this is. Okay, so question number 2 is, how are table game players treated differently than machine players when it comes to getting a W-2G?
Well, other than poker, and specifically poker tournaments, there are very few W-2Gs issued for anything as a table game because they're mostly exempt. There are no W-2Gs for blackjack, for craps, which are the 2 most popular table games. poker tournaments, if you net a win of $5,000, actually more than 5,000, so and that's net of buy-in, you're issued a W-2G. Additionally, if you have a wager which is a win of 600 or more and is 300 times the wager, so you win $10 million having put down $300, that is going to be subject for a W-2G. That pretty much limits it to things like progressive pie gow jackpots, which can be very large. But otherwise, there are very few W-2Gs issued for table games.
So let me get this right. So in order to get a W-2 on a table game, it has to be something where the payout is 300 to 1 or more?
300 to 1 or more, $600 total, and not a poker tournament. Poker tournaments net of $5,000.
Gotcha.
Now I hear once in a while about a CTR, cash transaction report. If you win $10,000 or more at a table game, does a casino have to file a cash transaction report?
Well, it's not necessarily the win of 10,000. Those are handled mostly on buy-ins and buyouts when you go to the cage. When you go to the cage and turn in, say, 20,000 of casino chips, yes, a currency transaction report is going to be issued. If you buy 15,000 of casino chips, yes, a CTR is supposed to be issued.
Okay, sorry, but a CTR is not reported as income. It's just reported that there was this large sum of money that had changed hands.
That's correct. CTRs are not really something to worry about. They have a reputation of something to be worried about. You really want to worry about are suspicious activity reports, SARs. Those are issued at times as little as $3,000 or more. For example, a bank will issue a suspicious activity report if you go into the bank, deposit $6,000 in cash in the morning and $6,000 in the afternoon. They'll look at it as you tried to avoid having a CTR issued. And their automated system,
I believe, right?
That is correct. That's a felony if you're doing it deliberately. But for example, many insurance companies require their business owners to make such deposits, which of course goes against federal law. So,
okay. Well, that's another interesting one there. But
all right. So the next question is, how are winnings reported on the tax form, and how can you deduct your losses?
Okay. Well, gambling winnings are reported based on sessions, and this comes out of a court decision called Park v. Commissioner, which was decided by the U.S. Court of Appeals for the District of Columbia. It's the second highest court in the U.S. And that decision was written by one Judge Kavanaugh. Yes, that one, who you might have heard of. So basically, you add up your within a session. It's not an individual pull of a slot machine or a video poker machine. So let's say you are lucky on your first spin and you win $1,500. Get that hand pay. But by the time you walk out, you've won 1,000. So you've given back 500. Your session win is 1,000, not 1,500. And that's what you should report as your win. You're allowed to deduct losses up to the amount of your winnings. There's a section of the tax code, section 165D, which says that gambling losses are allowed only to the amount of winnings. For an amateur gambler, gambling losses are reported as an itemized deduction on Schedule A, meaning you have to itemize, so your itemized deductions are going to need to be larger than the standard deduction, which is this year $12,400 per person. If you're married filing jointly, $24,800.
Which means you've got to do a lot of gambling to make that worth it.
Or you have mortgage interest, property tax, state taxes, charitable donations. Those are other itemized deductions.
But a majority of people would not do use the standard deduction, correct? So, because I've always sort of heard that the average gambler sort of gets screwed by this W-2G, where you get all these W-2Gs, and then if you don't itemize your deductions at the end of the year, then you're sort of just stuck footing the tax bill because there's no way to write off your losses. Because like you said, I'd say a vast majority, probably 90% of slot players lose back most of a jackpot, if not all of it.
And that is correct. the tax code is not friendly towards gamblers.
Mhm.
I do need to point out that the gambling income, the session reports or session results are noted on Schedule 1, Line 8.
Mhm.
All right.
Okay.
Well, okay. Sorry. But now you're talking about the losses. So what do you have to do? What's to prevent somebody from saying, oh, I went and I lost $5,000 today. So how do you record your losses? What do you have to show the IRS to say, well, here's my log of what I won and lost for each time I went?
Well, there's something in tax that we tell everyone, which is to keep good records. It's probably numbers 1 through 15 on a top 10 list. That's how important it is.
Mhm.
You're required to keep a gambling log. The regulations on this go back to the 1970s. And the gambling log should note the date, the casino name, the game you're playing, as simple as video poker. You don't have to write you're doing jacks or better or whatever. Start and end times and your result. If you're playing table games, you should note the table number. The regulation says note the name of every other person at the table or table number. So note the table number. And every single table in a casino is numbered. So that shouldn't be an issue. You can use other methods to justify your losses, such as a win-loss statement. But if you ever look at the fine print on a win-loss statement, it's going to have a disclaimer basically stating, I looked at one this morning, this rating system is not intended for tax reporting. Therefore, we make no representations as to either the accuracy of this information or its effectiveness as a proof of losses. Interestingly, the IRS likes win-loss statements more than they like an actual gambling log because the IRS likes third-party reporting. However, from a court standpoint, from a legal standpoint, a correctly done gambling log is absolutely admissible in every court in the land.
Okay, Matt.
Okay, now if you literally, so if if people are supposed to be keeping a gambling journal, they're supposed to be every time they sit down at a blackjack table, excuse me, pit boss, what is this table number before they start gambling?
Well, you don't even have to do that. If you look, the Dropbox has the table number on
There
it.
you go.
So it's very easy to find, but yes, every single time you are supposed to note it.
Okay.
Additionally, if you use a computer log or a phone app, email it to yourself once a month. The reason for that is the IRS considers every computer log made up the night before an audit. So if you can show the emails that you repeatedly sent it to yourself and the data is the same, the IRS is forced to believe it.
All right, let me
Did not
jump in
know
here
that. That's an interesting part there.
with a question, please. Now, most people, I don't think whenever they go to a casino, if they don't know anything about taxes or if they haven't hit a taxable, they are not going to have a journal, right? So if they happen, let's say they've been playing and it's July, they hit a jackpot. So what can they do to go back and recreate, and say they've lost $5,000 so far this year. In July, they hit a jackpot for $1,500. And then, they're down $3,500 for the year, but the IRS is going to say, oh, well, you won $1,500. So you owe money on this jackpot. And so what would your advice be for someone in a situation like that?
Well, win-loss statements are helpful.
Mhm.
Additionally, ATM receipts. If you happen to have bought in at a casino and you got your money from the ATM machine, the IRS will accept things like that at least most of the time.
Mhm.
We can't say to reconstruct a log, but obviously you may want to consider doing that. Unfortunately, the other thing is start keeping a log for the rest of the year. If you've been losing money, you may lose money the rest of the year, in which case you'll be able to prove your gambling losses in a different way.
Now, I had somebody tell me a very interesting idea one time that I'm sure is frowned upon and not, but let me ask you what your opinion was. He said that if you hit a taxable and you need to find out ways to track your losses to make up for that, he said just walk into a sports book at a casino and just start picking up all the bad tickets on the floor of the sports book that people throw away when they lose, and that then you could just use that as a way to keep track of all the bets that you've made and show that you've made bets. How terrible of an idea is that?
pretty terrible from my point of view because it's lying. You sign a tax return under penalty of perjury.
Mhm.
The IRS takes that pretty seriously.
Mhm.
I can't advise that. There is a court case where somebody did that, and the auditor didn't believe it because the receipts all had footprints on them. And second, this gentleman had never done sports betting in his life except for a couple days. Happened to be those 2 days. Third, one of the tickets had a player's card number on there, which wasn't his. So he did a trifecta of bad things.
All right, I was sure that was a bad idea. I just wanted to get your opinion on that. All right, so now there's been some talk about, because $1,200 is the threshold currently for W-2G, and it has been that way since the 70s and has not been adjusted for inflation, which seems it might seem a little crazy to some people. There's some talk about it being raised to be adjusted for inflation to $5,000. What do you think the chances of that actually happening in the near future are?
None. Hate to say that, but it should be. All the representatives here in Nevada want it to be done, but there is no chance. A few years ago, I think 2 or 3 years ago, the IRS looked at changing the W-2G requirements, and the IRS wanted to lower the threshold, not increase it, lower it to $600.
That would be
That's the
insane.
IRS's thinking. So there is no chance the IRS will do it voluntarily. Given all the spending on COVID, I don't see Congress making any changes that would reduce taxes.
Mhm.
All right, I just wanted to throw in my own personal situation here. I know in past years, I have won jackpots that I had to sign for. And at the end of the year, I wasn't really a winner, but you can't deduct it. So you just eat it and you pay the taxes on it. And I have the feeling that that's a situation with most gamblers. Would you care to venture a guess out of how many gamblers are thrown into that situation?
I agree with you, it's most.
Mm-hmm. I mean, because people lose money on gambling. They're not making. So yes, there are some people. But if I had to venture a guess myself, I guess maybe 10% make money on it. And I don't have a problem paying the taxes when I win. It just is rather annoying that I'm paying taxes on money that I didn't really win, and I see the same situation for other people in similar situations. But let me go on here. So now most countries in the world do not tax gambling winnings. So what happens if you're a resident of a foreign country and you come to the U.S. and you win a taxable jackpot? How do they treat your winnings?
It depends. And here it depends on the country. Also depends on the casino. Many countries have a tax treaty with the US that exempt gambling. So if you're from, I have a list, Austria, Belgium, Bulgaria, Czech, Denmark, Finland, France, Germany, Hungary, Iceland, Ireland, Italy, Japan, Latvia, Lithuania, Luxembourg, Netherlands, Russia, Slovak Republic, Slovenia, South Africa, Spain, Sweden, Tunisia, Turkey, Ukraine, United Kingdom, you win. No taxes are withheld if you have an ITIN or if your casino is an authorized acceptance agent and can issue an ITIN. An ITIN stands for an individual taxpayer identification number, basically the equivalent of a social security number for a non-American.
He came prepared today. That was quite a list.
Yes. If you are unlucky, you're from, say, Mexico, you are going to have 30% withheld from a jackpot, and that's that.
Wow.
If you're from Canada, you can file based on the US-Canada tax treaty. It's the only one like this, a Form 1040-NR and get back your amount withheld based on gambling losses.
So the casino is going to withhold 30%. And then what, you have to file you don't have to file a US tax return, you just some tax form, not a tax return.
The Canadians have to file a US tax return. It's an actual return. It's Form 1040-NR. It's a tax return for non-Americans. You can download it off the IRS website. And because you're going to have a Form 1042-S, which is the form issued for withholding attached, you have to mail those in. So it takes roughly 10 months to get your refund from the time you mail it in.
Wow. Now, question. You said that if you were from that list of countries that you just ran off, you only don't have to pay taxes if they were. You said something about a casino can issue a certain number.
Correct.
Are there a lot of casinos that can do that, or is that a thing that is like only happening a fraction of the time?
It's almost all of them.
Okay.
I've only seen a couple casinos that aren't acceptance agents because it's in their benefit to be an acceptance agent. So they almost all are, right? There's one in Florida that isn't, and there's one here in Las Vegas. Those are the only two I'm aware of that aren't throughout the country.
Interesting. It's funny that one's near you and one's near us. Okay, now what about state taxes? Because I know that some states take out a state tax as well. But how does that work? Can you, if you're not a resident of that state, like say you're on vacation, I know there's quite a few in the Midwest that do it. Say you're visiting one of those states and you happen to hit a jackpot, they're going to withhold some money for a state tax as well, right? Is there a way to get that money back?
There are two ways of potentially getting that back. First of all, in the US, we have what is called a dual tax format. You owe tax to the US government no matter where you live. You owe tax to your state of residence. So for example, I live in Nevada. If Nevada had a state income tax, I would owe it. I used to live in California, and I owe California tax on my worldwide income. Two ways of getting that back are: first, you can file a state tax return as a non-resident. Now, if you're an amateur gambler, the problem is you're basically trying to deduct gambling losses. Sometimes it will work, sometimes it won't. It's state by state dependent. Second, you must be able to take a tax credit on your home state for any double taxation. This is another US Supreme Court case called Wynne, W-Y-N-N-E, who sued the state of Maryland when he wouldn't get a state tax credit. So the Supreme Court said, there's no such thing as double taxation on state taxes. You've got to be able to get a tax credit. So let's say you have winnings in Indiana, which is a state that will tax your gambling and withhold, and you're a resident of Illinois. You can take a tax credit on your Illinois tax return to avoid the double taxation. Usually you have to file the Indiana tax return, and you're going to have to attach it to your Illinois return, but you'll get a tax credit and effectively pay the higher of the two states' marginal tax rates.
Okay, now let me ask you this. Say that you were visiting Indiana, or since you live in Nevada, you don't have a state income tax, or one of Steve or I was visiting Indiana and we live in Florida, we don't have a state income tax. What would happen then, since we can't get the tax credit since we don't have a state income tax?
If you can't file an Indiana return and take a deduction, you're out the Indiana tax.
Okay.
Is Indiana one of the states where you're not allowed to take any gambling losses at all?
Yes.
So now how does that work? I mean, people just have to pay if they keep getting these W-2Gs, even if they're big losers at the end of the year, they still have to pay on those W-2G forms?
Yes.
Wow.
Let me give you the list. Connecticut, Illinois, Indiana, Kansas, Massachusetts with an asterisk. Massachusetts, you're now allowed to deduct Massachusetts gambling losses, but not gambling losses in any other state. Michigan, Ohio, Rhode Island, West Virginia, and Wisconsin. So if you have gambling losses in those states and you're an amateur gambler, you didn't lose that money for state tax purposes.
Wow.
Additionally, Minnesota has an alternative minimum tax that tends to catch gamblers because you're not allowed to deduct gambling losses under Minnesota's AMT. New York State limits itemized deductions. Once you hit 100,000 of adjusted gross income, and you can lose up to half your gambling losses.
That's all a little crazy. Now I do know that in Mississippi they have I believe they have a 3% gambling tax, anything over $1,200. Now that's not an income tax, that's just a state tax on winnings. Are there other states like that, or is Mississippi the only one with that?
Mississippi is currently the only one.
Currently.
Okay.
Don't put it past them.
Yeah, that's why I say currently.
All right, so we've talked about federal taxes and we talked about state taxes, and now, believe it or not, there are some cities that tax jackpots. Now, I know in Ohio, I believe it's popular in 3 cities there. So, what is it? What is the situation with that? Is it similar to state taxes? You're going to have to file a city income tax form if you're a non-resident.
Correct. It is exactly the same. Ohio, not every city has this, but 95% of Ohio jurisdictions have a local income tax. Ohio is actually even worse than that. There are school district income taxes. There aren't that many of them, and as far as I know, none impact a casino in Ohio. But I have a client who has to file 4 tax returns who lives in Ohio.
Wow.
So yeah.
You must love those customers.
Well, they're good for my income, but it's if he moved 5 miles, his tax situation would improve drastically. There's one other state that has local taxes that impact casinos, at least currently, and that's Missouri. Kansas City and St. Louis, those 2 cities have local taxes. And there's at least one casino within each city.
Wow. That is a lot of taxes. All right. Did you want to ask this last question here, Matt?
Yeah. So I got to ask, overall, how do you think gamblers are treated by the tax system, and do you think anything can be done to make it better?
Well, they're miserably treated. Both professional and amateurs are miserably treated. One thing that would help immensely is what New Jersey and Pennsylvania do for their states, or state income tax. They're the only 2 states that allow gamblers to net their wins and losses if they're an amateur. And that is extremely pro-gambler friendly. It also is logical. It makes sense. It's not treating gambling as a sin, but as a fun activity.
Yeah, I believe the reason it started with all these states is they were considering it a sin tax.
That's correct. And that's unfortunately how Congress treats it. It would be wonderful if we went to that system. Therefore, I figure there's no chance of it. Professional gamblers are in almost as bad a boat. Up until 2017, or through 2017, excuse me, they could take a loss based on their business expenses. However, Congress changed the law at the end of 2017. And now a professional gambler is in one of only a couple professions where you cannot report a loss, even if he justifiably had business expenses in 1 year.
Now, is that was done at the same time as all the other tax changes when they doubled the standard deduction as well, or no?
Yes, that was part of the same legislation.
Okay, yeah, because that also made it very difficult because, I mean, they doubled the standard deduction, so now even less people are going to itemize.
That's correct. My house is almost paid off, so my mortgage interest is down. Other than my having a large number of charitable contributions or something unusual happening, I'm probably not itemizing. Something that you can do, which is a good idea to perhaps get you in itemizing, is to group your deductions, have on and off years. Well, something we do is we do our charity at the end or beginning of one specific year. So for example, let's say that this is going to be 2021 and on year. We'll do our 2020 charitable donations in January of 2021. A church or synagogue isn't going to really care too much if you're donating on December 30th or January 3rd. It's 4 days apart. Who cares? And then we'll donate again at the end of the year. That way our charitable donations double, which is a good way of getting more bang for the buck and potentially having us itemize in a year that we normally wouldn't.
And then I guess you would just base that on how well or poorly you were doing for that year.
Correct.
Okay.
Well, it's all a very complicated situation. And I hope you've enlightened people, the people who are watching this, that some might be even more confused than when they first started.
What's interesting is I should bring this up. I know someone who's a professional gambler, and he's borderline OCD and keeps immaculate records. And he got audited one time by the IRS, and he was so excited. He's like, I have immaculate records. bring it on. I'm going to take them down. And he said it was the most miserable experience of his entire life, and he would never wish that on his worst enemies.
A lot, unfortunately, an audit depends on who you draw.
Uh-huh.
And unfortunately, most auditors who deal with gambling, it'll be their one gambling audit in their career, so they have no idea what they're doing.
Mm-hmm.
It's a little different here in Las Vegas, where it's a lot more common.
Mm-hmm.
But in, for example, Miami or Memphis, how many people are doing gambling?
Yeah.
Mhm.
If you think about it,
How does that work? The auditors are from each individual area, or?
depends on the kind of audit. These
Uh-huh.
days, most audits are what we call correspondence audits. They're mail order.
Mm-hmm.
You send in your information by mail and you wait forever for the IRS to read it and respond.
Mm-hmm.
But like justifying gambling losses, or for a professional gambler, justifying travel and entertainment expenses, things like that tend to be on the local level.
Mm-hmm.
So you'll go into a local IRS office, or the auditor will come to you depending on the severity of the audit.
Mm-hmm. Gotcha.
All
Okay.
right.
All right. Well, Russell Fox, thank you very much for joining us today.
All right. So Russ, if people want to learn more about your work and your services, how maybe they could hire you with their taxes, well, where would they go to get that information?
Well, our website is claytontax.com. My tax blog is taxabletalk.com. And my email address is rcfox@claytontax.com. Our phone number is on the website. It's harder to reach us the closer we get to April 15th for obvious reasons.
Right. Okay. Again, a very complicated subject, but I think you gave us a lot of oversight into how it all works, and hopefully it's a little more understandable for people. And we thank you very much again for your time, Russell Fox. It was great meeting you, and we look forward to doing some more of these in the future.
Likewise.
All right. Take care. Thanks.
All right. So that does it for our interview with Russell Fox on gambling and taxes. If you like the video, please give it a thumbs up. Leave us a comment below. Let us know what you think. And don't forget to hit that subscribe button, click on the bell, and turn on all notifications so you never miss any of our other great videos.
Yeah, and if you'd like to try out internet casinos, don't forget we have a new website, AmericanCasinoBonuses.com. You can go there. We have about 25, 30 different offers. You don't have to put in any credit card information. You don't have to make any deposits. You can try these out for free. Again, AmericanCasinoBonuses.com. Thanks again for watching, and best wishes for good luck in the casinos.